The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now here on the program, pleased to have with us lead grain and farm supply economist with CoBank, Ken Zuckerberg is here with us today. Ken, great to have you on the program. Thanks for joining us here, and we appreciate the time. I hope you're doing well.
Jesse, same. Thanks for having me on. It's good to see you, and look forward to talking about fertilizer and anything else you might want to visit with today.
Definitely. Well, I think this conversation is going to be a good one. I'm looking forward to it. And I know you just released a article looking at fertilizer and talking about spring planting. And I think that's just a great place for us to start. You know, I've been hearing a lot of chatter start to ramp up here as far as spring planting, the acreage battle here in the U.S. What's it going to look like? What are we going to plant? Corn, soybeans, wheat, cotton? Obviously, a lot of that ties into the fertilizer market. We know we've had issues. We've seen prices start to pull back. I know nat gas has pulled back. A lot of different things surrounding this fertilizer market. But I know your article, a couple reasons why lower fertilizer prices won't shift spring planting decisions. So I'd love to hear your thoughts on why you think that's the case, Ken.
Certainly, Jesse. So if we unpack it a little bit, I guess every year at around this time, I start putting pencil to paper, as other people do, about what is the spring going to look like? What is the acreage mix going to be? And what's ironic to begin with is that we have some initial estimates out in the marketplace, corn versus soy, that were, slightly higher corn versus soybeans. And that's even though there's some compelling economics for soybeans. Notwithstanding that, then we had this, as you know, this massive drop in natural gas prices. Candidly, the drop was sharper than I expected. The corresponding drop on fertilizer was also sharper than expected. And then it raises the natural question as to, wow, if nitrogen prices are so cheap, wouldn't that benefit corn acres, just given the differential and how, things would pencil out? The reality is, as you also know, that a lot of the decisions made by growers that do work and work with CoBank's co-op clients, these folks make decisions in the fall for the next planting season. So if you have committed to a certain regimen of NPK with a decision to either rotate into corn or rotate out of corn into soybeans, the price drop that is experienced in the winter, it's not terribly relevant if you've prepaid for those inputs and you've also started, any field planting or field work, or alternatively preliminary fall application. So while it's tempting to believe this great drop in fertilizer would accrue to the benefit of the fertilizer intensive crops, i.e. corn and wheat versus soybean, the reality is those decisions have been made, and should the situation stay where it is, then next year, clearly there could be the business case for greater corn acres. But this year, we think natural forces, if you will take over, not the commodity price drop in plant nutrients.
Do we think then, thinking about that here, Ken, do we feel like that maybe some of this acreage battle could already be maybe baked into these commodity markets a little bit, thinking about fertilizer, how you laid it out, how a lot of those decisions have been made? Do you think some of that's maybe in the trade already, Ken?
So I would say it is, but also bear in mind that the indications that come out early on can be radically different within a few months. So for example, USDA obviously is the authority, at least the initial authority, on planted acreage and planting intentions. You remember the past couple of years, the numbers come out in the end of March, and the surveys, as I recall, are done in the beginning of March. Last year, with the Ukraine-Russia situation, there was so much angst after the USDA numbers came out because there was the, sort of a macro global event, which some would argue would be, more important to, plant more corn given and wheat given the dynamics of the Black Sea region. So there's always this tension of the surveys and then weather and then geopolitical events and then what a given farmer is actually able to put in the field. So candidly, I don't make a lot of forward predictions on it because I know I'm going to be wrong in June, and usually between March, and usually between March and June, that's where I have a better ability to do field checks and speak with both growers and retailers to try to figure out, okay, what will the June number be that is indicative of what this crop is going to look like? So that's kind of how I go about it and think about it.
Ken, one more thought on the fertilizer side before we change topics a little bit. Do we worry about logistics at all? I know logistics have improved when it comes to getting fertilizer, for this spring, but I know the concerns can still be there. Are we worried about any of that affecting the markets and affecting farmers here this spring?
The situation seems to stabilize. Prior to getting on the call, Jesse, I just did a quick check on some transportation rates, and I also did a quick check-in on the Mississippi River. So, that situation has seemingly corrected itself, or mostly corrected itself, from what I read. I think the angst between rail and truck is at least somewhat stable. I will tell you, and this is perhaps just me thinking about the world being, newer to ag in the past decade, spending, a few decades covering another industry. The Mississippi River is always low in September. So what am I missing, right? We have that challenge and that anxiety that seems to happen every year. So when I think about what the industry should do, part of this may be to think about, transportation, both grain and fertilizer, taking into account what seems to be a regularly occurring event. Notwithstanding that, shipping has been more, stable. I think part of the economic slowdown has helped, if you will, clear up global supply chains. So going into this planting season, that's not the big worry on my mind.
Ken, as far as the grain and oilseed markets are concerned here mid-February, you mentioned Russia, Ukraine. Feels like that is starting to become an issue back on the forefront of traders' minds here. We obviously, when it comes to the soybean market, we have this big Brazilian crop. We have the dryness concerns in Argentina, so we're watching South American weather. Corn feels like it's kind of been range-bound choppy. It's got some overhead resistance to it here in the trade right now. As you look at these grain markets as a whole, what stands out to you as maybe the biggest factor, biggest challenge to watch for here as we work through the month of February?
So as I think about it, the 1-year anniversary of the Black Seas conflict, or if you will, Russia's invasion into Ukraine proper, was 1 year ago. It seems like there's an escalation likely from what I read and hear. Will corn and wheat markets react to that? Could fertilizer react to that? By all means. On your comment with corn, I think what's interesting is our export book is down relative to last year, and that is a weak spot on the corn. Soybeans have been better, but of course, as you know, Jesse, this is that part of the year where soybean exports would probably start picking up from Latin America to China, not the U.S. to China. I think the markets are pretty efficient on that, but there's fits and starts, right? When you think about potential for a large crop, but then some challenges with respect to harvest being slower. Soybean harvest being slower. So I am acutely focused on all these items. I think we also want to balance the fact that Russia seems to have a big wheat crop, yet they're complaining about the Black Sea trade deal. So what does that grain export deal really mean? Well, they're still going to export their wheat. It just means that perhaps the Ukraine product may not, leave the ports or be delivered, although the production is so down that, even if it does get exported, we still will have, probably tight supplies. So balancing all factors, I think we have generally tighter global stocks. I think prices are probably reflecting, relatively tight environment for most of the grains, but there could be volatility either way here as we come upon spring. Weather is the wild card. You tell me. Third year La Nina, but we also have some suggestions that the La Nina effect may reverse or at least move into the next El Nino situation. El Nino, La Nina, El Nino. So when is that going to switch? What is that going to mean? And not for nothing, but whenever we have natural catastrophes around the world, we just had this earthquake in Turkey, we continue to see a lot of volatility in terms of, so-called acts of God. And the U.S. Farm Belt is seen a lot of weather volatility in the past couple of years. So these are the things that are sort of in the backdrop of what I'm thinking going into planting.
Well, a lot of things to watch out for, and I know folks can stay up to date with your commentary and more on the CoBank website, cobank.com, under the Knowledge Exchange section, including that recent article about fertilizer prices. And of course, we appreciate the time. Ken Zuckerberg with CoBank. Thank you for joining us today. We'll have to get you back on again soon.
Jesse, great visiting with you, and see you again very soon.